now going to recognize our final witness, Ms. Kelsey Brewer.
Thank you so much, Congresswoman Porter. My name is Kelsey Brewer, and I serve as the Communications and Policy Manager for Jamboree Housing Corporation. Since 1990, Jamboree has been building for good throughout California. We've been developing affordable, quality housing and supportive housing with resident services that create strong and healthy communities that transform lives and neighborhoods. And as a mission-driven nonprofit community development organization, Jamboree has engaged in dozens of successful cross-sector partnerships to develop more than 9,000 units of affordable and supportive housing. And I'm happy to say that even with all of the chaos of COVID, we have thousands more in our development pipeline. We're familiar with the various state and federal resources available for the financing and construction of affordable and supportive housing. And as I'm sure this committee knows, the low-income housing tax credit has been a primary driver of affordable and supportive housing development for seniors and people with disabilities. 28.7% of housing credit units are set aside for seniors. 5.3% of housing credit units are set aside for people with disabilities. And more than 31% of all housing credit units across the nation have a senior head of household, and roughly 12% of housing credit units have at least one member reported as disabled. Increased funding to the low-income housing tax credit and regulatory changes like creating and establishing a 4% credit floor would immediately fill the critical financing gaps for developments that are hanging in the balance for financial feasibility. And this would dramatically increase the supply of desperately needed housing, something that we've heard echoed many times here today. But again, this group knows well the importance of the housing credit and what changes need to be made to make it more effective. What I really want to drive home today is the intersection of federal investment and the individual resident experience. Developers don't typically talk about things like services and resident experience. Without regulation, some may not even offer services at their sites. But Jamboree is different. We view housing as a platform for service delivery. What happens inside of our communities is just as important as the physical infrastructure of these developments. It's partly because we're a nonprofit, longtime owner of our communities. When we build senior housing and housing for people with disabilities, it's not just for the 15-year regulatory period. It's for 55 years plus, and our resident team and our corporate team is just as much a part of the community as our residents are. For our seniors, not only do we support their financial needs through affordable housing, but we also work to connect them to the benefit programs like Medicare and CalFresh to ensure that the government social safety net is fully deployed around them. But seniors are more than the numbers and metrics that we sometimes attach to them, and our service model recognizes that. By providing on-site and accessible resident services with program elements that encourage social engagement and address resident concerns, Jamboree has seen a measured decrease in social isolation and loneliness for seniors living in our communities, which leads to better long-term physical outcomes and mental health outcomes for our seniors. In short, these outcomes assure that our residents are going to age in place longer, which ought to be the goal of all senior housing. The pillars of our service model focus on promoting the social and economic well-being of our seniors, as well as promoting opportunities for lifelong learning, education, and civic engagement. Our supportive housing communities take a similar approach to resident services. Seeing our residents thrive for the long term is at the center of everything that we do. At our supportive housing communities, residents typically have either a physical disability, a mental health diagnosis, or sometimes both. People living with disabilities, whether physical or mental health or mental related, are at an increased risk of experiencing homelessness and typically have less stable housing situations. And without stable housing, it's nearly impossible to achieve good health and positive educational outcomes. And that's why our service model focuses on empowering residents to live more productive and stable lives while maintaining housing. That may sound simple, but it involves a combination of housing first best practices, utilization of the harm reduction approach, most motivational interviewing, and intensive case management services that address the social determinants of health. I wanted to give you this context today of what goes on inside of our communities that serve seniors and people living with disabilities, because Jamboree firmly believes that meeting the housing needs of these populations isn't just about addressing the capital and financing needs of development and construction costs. Currently, there isn't really a regulatory obligation for Jamboree to provide any of the services that I just discussed, except for the 9% credit. And even then, those services are incredibly limited. Sure, there is a regulatory obligation to provide services on paper for most federal and state funding sources, but most of them go unfunded or underfunded depending on the underwriting of a project and other requirements. But Jamboree communities are different. We consistently incorporate the cost of resident services above the line in our pro formas, meaning that it's built into the deal. But what I want to stress today is that an individual organization's business practices shouldn't impact whether seniors and people living with disabilities have access to both quality housing and quality services. By providing additional funding for the operational costs of these communities, we can effectively create a federal standard of care for some of our most vulnerable groups. One of our core values is that the communities we build must be more than shelter. We aspire to help create safe and nurturing and cohesive communities for people living with disabilities and our senior population. And what we want our residents to be able to know is not only the safety of housing, but the dignity of home. Thank you again for your time today, and I look forward to answering any questions you may have.
Thank you so much, Ms. Brewer. Before we begin with our panelist questions, I'd like to recognize our distinguished chairwoman of the Financial Services Committee, a champion for accessible and affordable housing for all, Chairwoman Maxine Waters, for opening remarks.
Well, thank you very much. First, let me commend you for putting together this roundtable today. This is very, very important. And as we deal with the housing issues in our committee, we must remember to be focused on housing for seniors, for the disabled. And this roundtable is going to help us to put more attention on these areas that I think perhaps we needed to put more attention on. So I'm very appreciative for that. Let me just say, Ms. Porter, that I want to raise a question about supportive services. What I'm hearing is that there needs to be more resources, or we really do need to rethink not only providing brick and mortar and places for people to live, but we really do need to think more about supportive services the way we think about supportive services for the homeless. Am I hearing that there needs to be new programming, there needs to be additional resources, and more thought going into what we do with the disabled in particular, as it relates to HUD's responsibility? And so, Ms. Porter, let me just say to you, who put a lot of time and attention on this issue, that I would like to, have some response, to that question, because while I came in a little bit late, I think mostly what I've heard about is supportive services and the lack of. Is that true? Is that something that we have really missed as a committee in the way that we should have been paying attention to it? Is this something that we need to create some new programming for? Please, if you will allow your guests who are here today to continue to give more information on that and to speak to what those needs are, I would appreciate it very much. So with that, thank you for allowing me some opening statement remarks. I yield back the balance of my time to you.
Thank you so much. And actually, I think what we'll do is go ahead and recognize Ms. Brewer to start to flesh out what the chairwoman's asking about. What could the committee do? I think one of the things you said is that these services often go unfunded or underfunded. Developers focus on the cost of construction. That's how they build their financing. And because of that, after the property goes up, residents don't receive supportive housing. Can you talk a little bit? I've had the privilege of touring your Doria project right here in Irvine and seeing the kinds of supportive services. Could you tell the chairwoman and the committee a little bit about when we say supportive services, can you be concrete about what kinds of things you provide, and then talk about how that makes a difference in people's longevity and how in the way that the supportive housing fits into the neighborhood and community, and then make a policy recommendation for us on how we can correct this to make sure that we're not just putting up as you said, not just building housing, but creating homes.
Wow, that is a very large question. So I'm going to take it in a couple different parts, but I'll start with what Congresswoman Porter mentioned, which was Doria, which is one of our supportive housing sites. And, you know, when we talk about supportive services, I think a lot of times what people think about is the idea of we have a person on site that does programming like you do at a market rate housing, maybe there's parties and things like that. But when we're talking about supportive services for extremely vulnerable populations that we know we need to keep housed, the supportive services take a much more aggressive role. So, you know, at Jamboree, we have an entire division dedicated to this. This is our community impact team. And what that team does is create individualized resident service plans for communities. So that involves addressing the needs of the surrounding community. So the example that I can give you is we have a property in Northern Orange County that's intergenerational. It serves both seniors and families. And one of the things that we did when we went to build Wesley Village was talk to the surrounding neighborhoods about what lack of services were in the neighborhood. And then we actually built that space into our properties. So that includes on-site clinics, a Head Start program for youth, and things like that. But I want to emphasize that all of those things are, again, things that Jamboree builds into the deal. We go after and get additional funding or supply for it for ourselves to fund those types of programs. There is not really a dedicated federal stream of funding. So one of the first recommendations that I would make is when evaluating permanent supportive housing, and as that population begins to grow and age, we know that there's going to be healthcare issues. Jamboree, Orange County United Way, and the University of California, Irvine sponsored a study that showed that housing folks leads to better outcomes that are more cost effective. So one of the things that I would recommend that this committee look at is how do we align the investments that the federal government is making into programs like Medicare or Medi-Cal here in California and aligning that with the housing goals of these populations. Because instead of providing those healthcare-based services through the property financing, it could be complemented by aligning federal resources. So that would be one piece that I would recommend. And then the second piece that I would be is I definitely think that there's conversations that can be had with the private sector on this. I was recently staffing my president and CEO, Laura Archuleta, on a panel today with the California Housing Consortium. She was leading a panel talking with different lenders from across the state about how COVID-19 is impacting the way that they're looking at these deals, underwriting these projects. And they raised the flag on that call saying that we are starting to look more closely at permanent supportive housing sites. We're starting to look more closely at how you fund these services, because during good times when, you know, everything's going great and everyone's paying their rent, maybe we can figure out a way to pay for those services. But as credit tightens and all of those different things tighten, without a dedicated funding stream, lenders are starting to get concerned about the long-term financial feasibility of these projects.
Thank you so much. Chairwoman Waters, if you have any additional questions, you are now recognized.
No, thank you very much. I think my concern has been answered, and I learned a lot just in this short period of time about the lack of comprehensive supportive services for the disability clients that are in these properties. That's revealing. Thank you. And I'm sure that as we talk about how to deal with this, we can come up with some answers. Thank you so much, Ms. Porter.
Thank you. Thank you to all our panelists. Thank you, Congresswoman Porter, for pulling this together. I have I have a question for Ms. Brewer from a comment you made, and maybe you were just being illustrative, which is fine, but I don't want to let it slip. You had raised a concern in response to one of the early questions about, if I heard you right, about rising yield spreads in the financing of these homes. Are you seeing, as we look at, obviously interest rates overall are going down. Are you seeing rising borrowing costs as you look to finance these facilities?
Well, yes and no. I think that we're still trying to, and the lending market is still trying to, anticipate how the rest of the kind of shocks to our economy are going to play out. I know one of the things that we're continuing to look at to, determine the feasibility of these projects moving forward is rental payments. Depending on the type of project, if it's a project-based project, if there's a dedicated revenue stream to it, or if it's based off of rental income, it changes kind of the volatility of the project. So what I would say from the conversations that we're hearing from lenders, it's not necessarily about raising borrowing rates going up, but just more critically looking at how the project pencils out. Because remember, when we talk about the low-income housing tax credit program, and we talk about that kind of built-in public-private partnerships of nonprofits like Jamboree working with, large corporations, large banks, it doesn't give a guarantee that a project will be funded just because it pencils out. The lender is going to go in and look at the unit mix. The lender is going to go in and look at all of those different factors. And as we continue to see the effects of the economic downturn on the markets, what the lenders are telling us is we're going to be looking more closely at these permanent supportive housing projects, not because on the capital side, there's a lot of capital for the actual physical construction of these facilities, but the ongoing operating costs of what actually makes the facility successful. Housing without supportive services for these incredibly chronic and vulnerable populations is not successful. So where the concern from the lenders is coming from is how do we address that gap in revenue strain on the operational and service side, if that makes sense.
So how do you typically finance those ongoing funds? Is that out of working capital? Do you get revolvers? Does that just have to be funded out of operating cash flow?
It's a combination of both, yes.
Okay. And when you're building these facilities, what is there a typical sort of percent debt financing, or is it all over the board?
I would have to talk specifically to my development team, but I'm happy to follow up with the staff and get the actual specific split on that for you, Congressman.
Okay. Well, the specifics in it may be a moot issue, but one of the, as we're sitting here looking at this global economic downturn, one would presume that we're going to see rising spreads, particularly for those, those categories of investments that are a little bit more uncertain that they're going to be able to repay. And so the nature of my question is sort of what should we be, as I listened to a lot of your introductory remarks was talking about we should have seen this coming because we knew we had an aging population. Well, as we look forward right now, it seems to me that we can see coming some challenges in the riskier ends of debt markets, even as we can probably also see coming really cheap money for people like the United States, who at least so far had the history of not defaulting. And so if there are metrics that we should be watching to think about where there might be some gaps we can see coming, welcome your thoughts.
I have a lot of really smart people on the Jamboree business development and finance team. In fact, I can see my phone blowing up. They're starting to message me all the things they'd like me to say. So what I will do is I will follow up with your staff with that specific question, because I'm sure we have some recommendations. But, the broader kind of thematic theme of your question about preparing for these things, I can just speak to Orange County. Our population, our homeless population, the average age is steadily increasing. And that just increases all of those kind of compounding effects on healthcare and on housing risk. And so, as we think about how we kind of address that graying population, I think it needs to not only be about new funding streams, because that's absolutely something that we need, but also how do we align these federal programs that are touching all of these different vulnerable populations, but aren't necessarily communicating to each other to achieve the goal of healthy, safe, sustainable housing for seniors and people with disabilities.
Thank you, and I yield back.
I just want to say thank you so much to each one of our witnesses, to Ms. Pratt, to Ms. Couch, to Ms. Donald, and to Ms. Brewer. Thank you so much for joining with us and for all of your work, for helping to educate this committee. I'm grateful to all of the members that were able to join. I also want to recognize we have a very large number of staffers who were listening to this call and are able to take these ideas back with the chairwoman's support to continue working on this problem. So thank you very much for participating, for sharing your expertise, and for being a resource to this committee. With that, we're going to conclude the roundtable.